Yes, sir.
500. To this.
So 6 lakhs.
6 lakhs. DA?
2,40,000.
2,40,000. Next bonus?
70,000, sir.
70,000 bonus. Okay. Next, employer's contribution to PF?
24,000.
One second. Employer's contribution to PF 24,000. Why 24? I told you. I made the calculation also now. This is the calculation 24,000. Then professional tax how much?
First we had 2,500 and then deduct 2,000, which was paid by the employer. First we had 2,000 the salary, sir, then 2,500 deduction.
Yes. But first you need to add 2,000 minus 2,500. Next, what is the given? Contribution, professional tax, okay. Facility of laptop is fully exempt. Leave travel concession fully exempt. Motor car. How much?
Sir, 12,000.
12,000. That means total comes to, I think, 1 second. $985, 500 I told, no? The answer, how much I wrote? It is not 985. It will be even less because
945.
945. How 945? 6 lakhs plus 2 lakh 40, 8 lakh 40, 8 lakh 40 plus 70. How much? This is
Sir, 9,10,000.
see 6 lakhs plus 2 lakh 40, 8 lakh 40, 8 lakh 40 plus 70, 9 lakh 10, 9 lakh 10 plus 12, 922, 922 plus 2, 924, 924 plus 12. How much? See, 60,000 salary, sorry 6 lakhs, 2 lakh 40,000 is DA, 70,000 is bonus, 24,000 is PF, 2,000 is professional tax, 12,000 is 948. Right? Yes or no?
Yes, sir. So we have to subtract 2,000.
Subtract 2,500 plus 50,000. 52,500 you need to subtract. How much the balance? 895,500. I thought you guys have taken 45,000 minus 2,400 into 12,000. That's the reason why I was just checking. You guys got no? Shall I delete this one? Shall I delete this?
Yes, sir.
Okay. no, I can proceed with house property.
Yes, sir.
Okay, good. See, this is lesson number 5. Okay, I think page number 136 or 137, I don't know. 137. Okay. See, house property is nothing but whatever the property from which you receive the rental income. It is only the rental income which is taxable under this head. Rental income, be it residential or be it commercial, whatever it is there, whatever the rent you receive from the property, both land and building, in any one, if you receive rent for letting the land or letting the building, if you receive any rent, that will be taxable under this head. Okay. Who are all taxable? All persons are taxable. All persons, including individuals, are taxable under the head house property if any renter, if the rental income from house property is received. Two conditions to be satisfied. They should be a house property and assessee should be the owner of the house property. If you are the owner, you are receiving the rent, then it is taxable. If you have taken the property on rent and you sublet to some other person, hence whatever the rent you receive from subletting is not taxable under this head. It will be taxable under the head income from other source. Minute difference. Okay. House property means building and land appertinent thereto. The building, along with that whatever the land which is attached to, or it is somewhere near to that building, if you are letting that also along with the building, both are taxable under the head house property. You guys might have seen, no, whenever you go to temple, normally the parking space will be next road, it will be given. Okay, some sites, vacant site will be available. In that site, the owner would have let that site to temple authorities for the parking purpose. That is, whatever the rent temple pays to that owner is taxable under the head house property. That's the meaning of land appertinent thereto. Okay. How many types of house properties are there? One is self-occupied, second one is let out, third one is deemed to be let out. How many types are there?
3 types.
What are those?
Let out,
Self-occupied, deemed to be let out. Okay. Let out means what?
Given out for rent.
Given out for rent. Self-occupied means
The person himself stays
himself stays there. Deemed to be let out means if any person Assume he has 4 houses. 1, 2, 3, 4. In all these 4 houses, he is self-occupied. Yes, self-occupied. Okay. Practical way, all 3 or all 3 would have rented, but he says that it has been self-occupied to evade the tax. Okay. We don't go that far. For the time being, we assume that all these 4 houses are self-occupied. In that case, any 2 houses, how many? Any 2 houses will be treated as self-occupied. The other 2 houses will be treated as deemed to be let out. Any 2 will be treated as SOP. The other 2 will be treated as deemed to be let out. In which case, when all the property, whatever the assessee owns, that he claims to be self-occupied, all the property. In that case, 2 will be presumed to be self-occupied and the balance house properties will be deemed to be let out. Any confusion in this? Any confusion?
No, sir.
Okay. Then, how to tax? The question arises. Types of house property. One is let out, another one is self-occupied. Let out property, it is taxable. Okay, fully taxable. Self-occupied property, if self-occupied property is used for residence or self-occupied is used for business. Assume that you have 2 houses. One house you will be using for your own residence, another one where you start your practice. If that is used for any business or profession, that house property shall be ignored. That means it is not at all comes within the purview of house property. Understood in this? Please interact, otherwise I may not be knowing. There are few things you need to understand in this. Okay?
Sir, can you explain again?
If you have 2 or more house properties and any one of the house property you are using for your own business or profession, that house property will not comes under the purview of house property. That means this, it is not at all taxable under the head house property. Okay. Whatever you have given for residence and commercial both. Okay, in this commercial or residence, normally the residence, see, don't get confused with commercial property. That is whatever the property you use it for your own business. This is that. Whatever the let out is this one, commercial property will come under this. Commercial property let out, residential property let out will comes under this. Okay, if it is self-occupied and that self-occupied is for your own profession or business, ignore, do not consider anything. If self-occupied is for residential purpose, see, how many houses are there with you? If only 2 houses, both are self-occupied, then both are exempt from tax. That means it is not chargeable to tax under the head house property. If more than 2 house properties are there, then 2 house properties are exempt. Balance self-occupied property will be taxable as deemed to be let out. I explained over here. Yes or no?
Yes, sir.
Okay. That has been displayed in a chart format. Okay, I will share all these things. Don't worry. Understood?
Yes, sir.
Okay. There is an amendment. Previous 2-3 years back, it made the Nirmala Sitharaman or Arun Jaitley has made the amendment. Okay. There are two. Please understand this properly. You might get case study on this. They give the case study. You will have to tell whether it is taxable under the house property or not. Like that, they will ask. You cannot blindly say it is taxable, it is not taxable. You have to apply the provisions. Okay. See, first amendment. It is not at all amendment as of now because it has already been included in the house property. If any building held as stock in trade. Stock in trade means what? Stock in trade means what? Warehouse inventory for developer. Shobha developers, Brigade Metropolis is there, no? Those kind of stuffs. They construct the apartments. For them, building is the stock. Okay. If any building held as stock in trade and it has been let out, stock in trade means what? Stock in trade means what? For the purpose of sale. The building constructing for the purpose of sale. Yes or no? Will the brigade people will let you the property or they will sell?
They'll sell, sir.
They sell. Okay. If for the purpose of selling they have constructed, but instead of selling, it has been let out. In that case, whatever the rent, that means annual value, I will come to that annual value. For the time being, assume that rent, it will be chargeable under the head house property. You guys are understanding the thin difference in this? The stock in trade is meant for sale, but it has been let out. What is the difference between the sale and let out?
Sale is when ownership will change. Letting out, ownership will not change except you receive rent.
That means he is earning income regularly from that property, right?
Yes, sir.
By way of rent, that will be chargeable under the head house property. Okay. Whatever the rent received, it will be chargeable as house property. Only with respect to only one situation where there is a company. Listen, where there is a company and that company is in the real estate business or the development of the properties business. In that company's memorandum, the object clause is mentioned as developing the property and selling. In that case only it becomes business income. Otherwise, it will always be income from house property. This is Chennai properties case. If there is case law, I think they would have given. Chennai properties case. Okay. Would income from letting out of property by a company whose main object, as per its memorandum of association, is to acquire and let out the properties, be taxable as its business income or as income from house property, considering the fact that the entire income of the company as per its return of income was only from the letting out of property. Except with this exception, only it is applicable to companies where it has included the clause in the memorandum under the object clause. The main objective of the companies is to letting out, it becomes business income, otherwise it becomes house property income. Understood, guys? You get the case on this, you get the question on this. Which one? This one. They will not discuss the case of Chennai Properties and Investments Limited. No, they will give one case in the sense some paragraphs of the problem. You will have to analyze the situation or the case, and you have to quote this case law, and you have to provide your answer. Whatever the cases relating to the Supreme Court is very, very important for new scheme. Why? Because you are expected to write descriptive answers. Are you guys understanding right? What is meant by letting out? If the object clause itself is mentioned that it has the main object of letting out the properties, in that case it becomes business income, otherwise it will always be house property income. Okay, please remember this case law, Chennai Properties and Investments Limited case law. Okay, Supreme Court I am quoting. Second one, you have to understand this one very carefully. If any building remains vacant, what does it mean? If building remains vacant means, I'm just taking the brigade example. Brigade. What is the main object of the brigade? Construction. Right? They construct around 600 flats. 1 is equal to 100. Okay? 1, 2, 3, 4, 5, 600 flats they construct. Understand the situation. If any building remains vacant, out of the 600, assume 50 buildings remains vacant. Remains vacant means what? It is neither sold nor let out. Understanding?
Yes, sir.
Okay. Remains vacant or not let out by the builder, then the annual value will be taken as nil for a period of 2 years from the end of the financial year in which completion certificate is obtained. Anything you can interpret where you have understood, or you want me to explain it with the yes? Assume that completion certificate is received on 3rd August 22. Assume completion certificate for the buildings has been received by the brigade group from the Bangalore BM, which one? BMCC or what? Bangalore Mahanagar. What is Bangalore Corporation? BBMP, Broth Bangalore Mahanagara Palike, BBMP. From BBMP, they received the completion certificate on 3rd August 22. And 50 remains vacant. And they have not let out also. In that case, up to financial year ends on which date? Financial year ends on 31/3/23. From this date, 2 years. That means 31/3/25. Up to this 2 years, the annual value on these 50 vacant plots is not taxable. If they do not sell or let out these 50 vacant properties after this date, from 1st April 25, this becomes chargeable under the head house property. The annual value will be chargeable as income from house property. And let me tell you first itself, house property is taxed on notional income, not on the real income. That we come to know when we do the when we start learning the how to calculate annual value, then we will come to know. It will be chargeable to tax under the notional income. If notional income is higher than the real income, actual income. Any doubt in this second one?
No, sir.
Everyone understood?
So just a query here, like even after 2 years, after obtaining the completion certificate, if the building is still vacant, like how do they consider it, sir?
After 2 years also, if the building is vacant, for these 50 buildings, what is the fair rent? Fair rent means if the same kind of property would have fetched the rent, that they will take. And what is the municipal value? Municipal value means how much BBMP would have valued the rent in that similar locality, that they will take. They compare the both. Whichever is higher will be considered as your annual value. If there is any rent control act applicable to that building or to that area, if there is any rent control act is there, whatever the rent they fix for the similar kind of property, that will be compared with the whatever the answer you get by comparing the fair value and the municipal valuation. That will be compared with the standard rent. Whichever is less will be considered as your expected rent. That rent will be taken as your annual value for the purpose of levying the tax.
Okay, sir.
Any doubt? Please be interactive. If you guys have any doubt, please ask me. If you guys do not have any doubt, please reply that you don't have any doubt. Okay? Shall I proceed?
Yes, sir.
Please Remember this one, it may be important. This one. Next, how to compute income from house property. How to compute. As we are aware that there are three types of properties: self-occupied, let out, and deemed to be let out. What is deemed to be let out?
Anything, I mean, the houses after 2 will be deemed as let out.
Any assessee who owns more than 2 house properties as self-occupied, the 2 house properties will be taken as self-occupied. The balance house properties will be taken as deemed to be let out property. Okay. First I will go to self-occupied because it's very easy. Only one deduction you will get under self-occupied house property, that is interest on loan. Which deduction you will get? Only the interest on loan. How much? Maximum 2 lakhs. How much amount? Maximum 2 lakhs. How many of you are claiming this deduction? Malini, Satyamurthy, Shantamurthy sir.
Yeah, claiming.
Gana.
Yes, sir.
Are you claiming, Malini?
My
Or-
husband is, sir.
Claiming.
Yes, sir.
You just check with him how much is claiming and showing in the return of income. Maximum 2 lakhs. Okay. Assume that you have paid interest of 4 lakhs. Under this head, only 2 lakh is allowed as deduction. Understood? You guys observe these asterisk marks I have given. Self-occupied property, maximum interest allowed is 2 lakhs. Interest on loan, self-occupied property 2 lakhs. This is interest on loan, all three. For self-occupied it is 2 lakhs. For DLOP, LOP, no limit. Understanding right?
Yes, sir.
Okay. Now I will come to LOP. LOP, DLOP, there is no change at all. Only one difference is that in DLOP, you are deeming it as let out, hence there is no rent received. You guys agree with me?
Yes, sir.
Right? Except that all other calculation part, whatever it is applicable to LOP, same replica to DLOP. Hence, if we learn LOP, it is as good as learning DLOP. Okay? Hence, I will explain only LOP only. Okay, see. First, you have to go in this order only. That is the precondition. You need to go in this order only. First one, municipal value. If the municipal value is given for the property which you have let, take that. If there is any fair rent given in the problem, take that. Compare these two, municipal valuation or fair rent. Example, 2 lakh 40 is your municipal valuation, 3 lakh is your fair rent. Compare these two, whichever is high, you take that one as the value. Which is the higher one? 243 lakhs.
3 lakh.
3 lakh is the value. Please consider that. This 3 lakhs will be compared with standard rent if it is given in the problem. Compared with that, assume standard rent is given as 2 lakh 50. Out of these two, whichever is less you have to consider. Out of these two, which is the least one?
2 lakh 50.
2 lakh 50. That means the fair rent or municipal valuation, whichever is high, should not exceed the standard rent. Understood? Yes or no? Yes. Okay. The actual rent received is 4 lakh. Assume that you have received the rent of rupees 4 lakhs in the year. Compare whatever you arrived at after comparing 3 lakh and 2 lakh 50 with 4 lakhs. Whichever is higher, that will be your gross annual value. Let me explain once again. If the municipal valuation is given, take that amount. If fair rent is also given, take that amount. Whichever is high, please consider that. In this case, municipal valuation is 2 lakh 40, fair rent is 3 lakhs. When I compared both, 3 lakh is the higher one. I am taking the 3 lakh as my first part for the calculation purpose or the comparison purpose. I will compare this 3 lakh with the standard rent. If my standard rent is 2 lakh 50,000, 3 lakh and 2 lakh 50,000 will be compared. Whichever is less, I will take that one as my expected rent. Please remember this word, expected rent. This expected rent will be compared with the actual rent received. Whichever is higher will be considered as annual value, gross annual value. This is the first situation. I will go to the next one. 2 lakh 40 and 3 lakhs will be compared. 3 lakh is my first value for the comparison. If the standard rent is 3 lakh 20, which is the expected rent, how much is the expected rent? How much is expected rent in this case?
3 lakh 20, sir.
3 lakh. Because whatever the value you get, which is highlighted here, comparing municipal valuation and fair rent, that should not exceed your standard rent.
Okay.
This 3 lakhs will be compared with the actual rent. Whichever is higher, that will be your gross annual value. Understood?
Yes, sir.
From this gross annual value, only one deduction is available, that is municipal taxes paid. Paid means what? Paid means what? Actual payment should have happened. Paid by owner only deductible. Paid by tenant is not deductible. Please, you should write all these points. Paid by owner is deductible. Paid by tenant is not deductible. After deducting municipal taxes, whatever the balance amount comes is net annual value. From this net annual value, only two deductions are available. First deduction, standard deduction at flat 30% on this value. Flat 30%. Okay. Assume your gross annual value comes to 40,000, 4 lakh, and the municipal taxes paid by the tenant, paid by the owner is 40,000. Net annual value comes to 3,60,000. On this 3,60,000, 30% is allowed as standard deduction. 30% of 3,60,000 comes to how much?
1,08,000.
1,08,000 is deductible, and any interest on loan which you have paid or payable interest on loan, that can be deductible. Assume in this case 3,40,000 interest on loan is there, which can be deductible. From 3,60,000 you need to deduct these two. After deducting these two, you can get negative value in case of LOP and DLOP. But in case of SOP, the net value shall be either negative or zero. It can never be positive in case of SOP. In case of LOP and DLOP, the three possibilities are there. It can be zero, it can be negative, it can be positive. All three possibilities can come. Whatever the net result is there, this is income from house property. Easy? Tough?
Understandable, sir.
Understanding?
Yes, sir.
Okay.
Yes, sir.
Good.
Little confusing also, sir.
Little confusing. How, where you are getting confused? Is it Gahana?
Yeah, yes, sir.
Yeah. Where it is confusing?
So I think when we start doing problems, maybe it will help.
Before that only, please clarify.
Yeah.
Get clarified, because once you guys see the problem, I think you guys will lose the track where it is getting confused.
The calculation part where we have to see a fair and expected rent, that part.
See, here everything I have given.
Yeah, yes, sir.
Okay. The arrow mark is going up means higher, coming down is lower, going up is higher. Okay. Now I haven't gone into the, what do you call, complications part, complicated parts. Only the straightforward we are seeing. Okay. Now I am going into that, because you have all these things. Do you expect the property to be let out for the entire year always?
No, sir. No, sir.
It can be remain vacant for any number of months, no, in a year. Yes, sir.
Yes, sir. Yes, sir.
Then in that situation, how to calculate becomes the question. Are you guys understanding now my questions?
Yes, sir. Yes, sir.
Okay. What is our previous year?
22-23.
22-23 means from where it starts?
1st April 2022, March 31st March 23.
1st April 22 to 31st March 23 is our previous year. In that previous year, 12 months will be there. For the 12 months, whatever the property you have let out, that property rent will be taxable as per this calculation. Do you guys agree? Do you guys agree?
Yes, sir.
Okay. Assume that in this case, please understand the situations. Okay. In this case, some months it will be self-occupied. I will First take the easier one. First few months it will be let out. I will take it as 10 months let out, rent being 25,000 per month. 10 months it has been let out at 25,000 per month. 2 months vacant. 2 months vacant, 5 months vacant, 7 months let out. Any combination can happen. Is it in your control to get the tenants as and when the another tenant vacates?
No, sir.
Hence, don't speculate, sir. Only 2 months will be given. Always like that. Don't ask the questions because it can remains vacant any number of months. It can be let out any number of months. Are you guys understanding my points? If this is the case, what is the annual value, gross annual value that we need to calculate? Are you guys understanding my question, right?
Yes, sir.
If it is let out for 10 months, what would be the rent I would have received? 25,000 per month rent. 10 months means 2,50,000.
Yes, sir.
How much I could have received if had the property not been let out? I mean, not been vacant. Another 2 months rent also I would have received.
Yes, sir.
Total rent for the year would have been 3 lakhs.
2 lakhs.
Yes or no?
Yes, sir.
Now, please remember this 3 lakhs, 2 lakh 50 and 50 breakup also. Okay. If the expected rent year means expected rent, I will write here. Year is equal to expected rent. Year is equal to actual rent. VR is equal to vacant rent. Okay. I told you guys to remember this. Yes or no?
Yes, sir.
How to arrive at this expected rent?
Principal value and fair
Principal
rent.
valuation or fair rent, whichever is high, that will be compared with the standard rent. Whichever is low, that will be taken as expected rent. Okay. In this case, I will take these 2 cases only. I will take one second. I want few more clarity. This one I will take 3,80,000. This one I will take it as 4 lakhs. 3,80,000 becomes my expected rent. Okay, these two. I will compare these two. Okay, see. Please remember 2,50,000, 3,80,000, and this 3 lakh, 2,50,000, 50. These 4 figures, please remember. First one, if expected rent is less than or equal to actual rent plus vacant rent. Okay. First situation we will see. What is my expected rent?
2 lakhs, 2 lakh 50.
2 lakh 50. Okay. What is my actual rent?
3 lakh.
Actual rent. Two lakh 50. Actually, you have received 2 lakh 50. Vacant rent is how much?
50,000.
50,000. Put together this one. How much it comes to? 3 lakhs? Sir, no. These two figure comes to 2 lakhs, right?
Yes, sir.
Now see. If expected rent, this is expected rent, is less than or equal to actual rent plus vacant rent, this one. Is it less compared to this? Yes.
Yes, sir.
Yes. In that case, gross annual value will be your actual rent. Actual rent. How much?
2 lakh 50,000.
2 lakh 50,000. You have to consider 2 lakh 50 as your gross annual value. Actual rent you have to consider here 2 lakh 50. Understanding?
Yes, sir.
Okay. Second scenario. If expected rent more than actual rent plus vacant rent. Actual rent plus vacant rent is remain this one. Expected rent. How much it will be? 3 lakh 80,000.
Yes, sir.
3 lakh 80. Okay. In this case, expected rent is more than 3 lakh, right?
Yes, sir.
In that case, my gross annual value will be expected rent.
So we have to take the higher amount as always.
No, not always. You have to compare like this.
Okay.
Compare. You have to write in somewhere what is your expected rent, what is your actual rent plus vacant rent. Actual rent plus vacant rent will be compared with the expected rent. If the expected rent is lesser than these two amount, then actual rent received is your gross annual value. If expected rent is more than the sum of actual rent plus vacant rent, then the gross annual value will be expected rent. Understood?
Yes, sir.
Okay. I will erase all these things. It is given in the notes. I have solved the problems also relating to that. Okay, relating to that, I have solved the problem also. Then the question comes, how to calculate actual rent? Assume you have let out the property for 10 months. Last 10 months, April and May it remains vacant, assume in that way. Okay, from June you have let out the property for a period of 10 months till the end of our previous year. at 25,000 per month. The tenant gave only rent for 8 months. He has given the rent only for 8 months. Another 2 months, because of COVID, he couldn't give the rent. Assume in that way. He couldn't able to give, or some financial crisis, he couldn't able to pay the rent. He requested you to that he will pay at later stage. You agree? Understood? He said that he will give the 2 months rent in the next year. You also agree? In that case, the rent received will be taken as whatever the rent you actually received, whatever the rent you going to receive, minus unrealized rent. What is actual rent receive? Actual rent means, are you guys noticing all these things? 4 ostrich mark.
Yes, sir. Rent received plus rent receivable.
Rent received plus rent receivable minus unrealized rent. Okay. See, in this case, he requested you that he will pay at the later stage. Then it becomes receivable. Okay. Assume that you have let the property to me for a 10 months period during the previous year. I stayed for 10 months, but I only paid the rent for 2 months. Without your notice, I vacated your premises. I haven't given any advance. For sir, you did not take the advance. Even I don't give. I vacated without your notice and I couldn't able to give you 2 months rent. That 2 months rent becomes unrealized rent. What is that? Unrealized rent means what? Unrecoverable or unrealized. That means not received. You need to deduct that.